Morning, everyone.
What's up, gang?
Morning.
Good morning.
Morning.
Good morning.
Can you hear us okay?
Yep.
Yeah.
A little different setup this week, so all new for us. Are you guys in Florida, Jim and Charlotte?
Yeah.
Yes, we are.
Yeah, I hope you got it. All right, no more bragging.
All right,
Yes.
you're
I-
Just
banned.
messing with you.
You're
Way to
banned.
win
Come on.
friends and influence people.
Yeah, look at the bamboo in the back.
That tipped me off.
Yeah.
was-
Hey, great job, Charlene, too, over the weekend, getting guests to, Jeff Glover. Way to go.
Yay. Let's get them signed up. Yay.
All right, while people are coming on, tell us something good. Happy Mother's Day to all of our moms that are hopping on. Hopefully you had a great day.
Something good. Business is picking up for me. We've got 4 under contract this week.
Way to go. Way to go. I told you that would happen. You just go out of town.
Yeah.
That's it. We'll just stay.
Yeah, there you go, right? So you gotta come back and get inventory though, right?
Yeah.
Who else has got something good? Carly, you always have something good. Come on.
I've got 3 closings this week, and I'm headed to pictures for my new listing that goes live Friday down on Fishing Creek Lake. So,
Awesome.
still good.
Way to go, Zach.
Well, something good for me. I had a great meeting with you, so I'm very positive that all these things are gonna turn out great. I'm already reaching my neighbor for a listing, and I have a great Mother's Day weekend with my family.
I
Yeah.
love it. Thanks for sharing that. Okay, one more before we jump in. Tell us something good. Pamela, I see your smiling face.
Okay, you got me. So I have a listing. I have a listing that will be coming on the market next week. So we're excited about that.
That's a great thing. All right, and for all of you that saw my 5-month-old grandbaby over the weekend and the picture that I posted on Facebook, it was not chocolate. Okay, it was purple, what potatoes, or-
Oh, like the little.
no, oh my gosh, totally just lost my mind. However, it's not chocolate. We didn't feed the 5-month-old chocolate, so. I might have, but my daughter would have killed me. So that's my good news. We had a great Mother's Day weekend with my grandbaby. So, all right, let's jump in, Chip.
That's awesome. Well, good morning, everybody. We're gonna share a slide. What we're gonna do is we're gonna share some slides. Some of you may have seen a version of this if you went to family reunion this year. But no, we're not gonna dig into all the macroeconomic stuff. I do want to start with specifically home sales. So we hope that you're going to see this on your screen shortly. Can you guys see where it says home sales annual?
Everybody see that? Yes?
Yeah.
All right,
Yes.
got it. So on this slide, can you scroll down so we can see the years?
Yeah.
There we go, perfect. How many people have been in the business, say, over the last 6, 7, 8 years? How many people have been in about that long?
Put in the chat how long you've been in the business. All right, 12 years, 5 years, 10 years, awesome. 2 years, 8 years, 10 plus, 10 years.
All right, perfect. So here's why I asked the question. I want you guys to go back and look at like 2001 and 2002 on this chart. How many homes were we selling annually?
Someone shout it out. This is not a trick question.
Yes. 5.2, 5.3, 5.6.
Yeah, 5.2, 5.3. Then fast forward to 2008, how many did we sell?
4.1,
What about the year after that?
4.3,
What about the year after that?
4.2, 0.3, 0.7.
All right, got it. Thank you, Charlene. So here's the bottom line, guys. I got into the business. Robin got in 01. I was in 02. We came into a market where we were selling annually about 5.3 to 5 point, maybe say $5 million, 5 million homes a year. And then what happened 6, 7 years later, the economy crashed and we went down to 4.1 million units sold in that calendar year. And we stayed around that number for about 4 years.
Can we just talk about that timing too? I
Sure.
know, so Billy, I think I saw you online. What was happening though during that time? I mean, what caused that market crash during that time?
What caused the market crash of 08? Well, to put it simplistically, lending got a little bit out of hand. Everybody and their brother was getting a mortgage. There was no equity in houses. So when houses prices started dropping, people just walked away from their houses. Like we were just talking about it the other night. And I can remember working with folks in 2012, 2013, and their bank had not processed their deed in lieu or their foreclosure from 2008 or 2009.
Crazy.
Yeah. Big
Yeah.
difference between today. Today, we've got record equity in our homes.
Yeah, I was just gonna say, I think one of the main things you just said there that hopefully everybody heard loud and clear was there was no equity in the homes when the crash happened. So, okay, let's move forward, Chip.
So if we didn't have equity, and I love that you guys set the stage for that. If we didn't have equity, we were still selling 4.1 million homes, 4.3, whatever numbers you want to use. If the market was that bad, why were we selling that many homes? Life shows up. People had to do it,
People club.
right? They didn't have a choice of waiting for a better market, better economic conditions, more equity in the house. If they had to sell their house and move, they had to sell their house and move.
Or they had to buy.
Or they had to buy or whatever, right? So the point of it is, here's where I'm trying to go with this, guys. And Billy, you know, he talked about that, where lending had gotten out of hand, which is our peak of 7.1 million homes. Easy money, easy sales. Okay, now let's fast forward a little bit. Let's start looking at like 2020 and 2021. What happened to home sales? We started to peak again, didn't we? 5.6, 6.1 million units in 2021. And then what happened?
Well, let's go back to the reasoning why that happened.
Well, that's where I'm going right now.
Okay, gotcha. Okay.
Yeah. So what happened? Why did we sell 5.6, 6.1? Even if I go back to, 2019, it was still 5.3 million homes, right? Well, the reason being is that lending was favorable, and there's a difference. So there was very favorable interest rates that was really kind of fueling the demand for people to buy a house. The difference is this: the lending. It wasn't that lending had gotten unstrict, right? They weren't like cutting corners and getting all these kind of exotic kind of loan programs where anybody and their brother could go out and borrow money and buy a house. It was just about artificially low rates. The lending standards were still very strong. If you go back to 2002, 3, 4, the lending standards were not strong.
And don't you feel like, Chip, that people, when the interest rates drop like that, they just felt like that was a moment in time when they could buy, if they never thought they could buy before, now they can. And if they could buy more than they ever could. They could buy the bigger house.
Yeah, and absolutely, they can move up. I think the other thing that drove a lot of that too is because during the pandemic, people could work from wherever.
Right,
And all of a
right.
sudden, it's like, oh, I have a job in New York, but we witnessed it in Mount Pleasant. People were flying down there as fast as they could, waving cash to buy, $1 million properties back then it had gotten so bad in the market down there, we were measuring days, or months of inventory in terms of days. And literally, we were down to like 3 to 4 days sometimes.
And I feel like too, that people had, being at home, they had time.
Right.
So they had time to look at inventory,
Sure.
time to dream about where they wanted to live, time to work with the, like, it's different when you're in an office every single day grinding and yet, you know, and trying to figure out where you're gonna live or what you're gonna do, and this gave them time, money, and opportunity. It all was like that perfect storm.
It became a perfect storm.
Yeah,
Yet lending standards are still very much, you know, in line with what the industry kind of needs.
Right,
They
the
weren't-
norm.
Right, it wasn't getting crazy that way. But then, okay, so interest rates started to go up in the fall, late spring or late summer, early fall of 22. What happened? We went from 6.1 to 5 million. We dropped 20%. If you think about it, the amount of homes we sold. And then what happened again? Another 20%. Down to 4.1 million units. That was in 23. That was in 24. Projected this year to maybe be 4.3.
So what's happening? So not a lot has changed, Chip, over the 23-24 as far as our economy. I mean, not a lot's happening. Why the surge now for in projections?
Well, I think a little bit there's a couple of things that I see that's kind of popped up here is that interest rates have they're still kind of fluctuating around, but they're not at 7. They're definitely not heading towards 8, right? They're staying in the 6s. And we're gonna see something else here about interest rates in just a minute. But so I think we have that. And number 2, I think because of all the equity that's in the market, and people have to, they're going to, and they can afford to, because they're not as sensitive to rate and payment. So if you think about it, okay, so we got 4.3 projected this year, 4.3 million homes. I think what's happening, there's a bit of pent-up demand too.
For sure. Anyone else have any insight on why you think the home sales are going up now after those 2 years of kind of a steady 4.1? Some other reasons.
Another reason could be that people are required to go back to work. They are not allowed to work from home. So those people who moved to Florida, Mount Pleasant or wherever, now they have to go back to where their corporate offices are located.
Yeah, Pamela, yeah, great insight.
Yeah.
What else?
Household creations, people are still, getting married and having kids and want to move out of their apartment and into a home of their own.
Need, right? Yeah.
So life events are still showing up.
Mhm,
And again, sometimes those life events, people don't have the luxury of waiting
mhm.
for a better something, more inventory again, better conditions, better whatever. So when they have to, they are. If we look at that dotted line on there, that pink color dotted line, we could call that a trend line based on last year's sales or even 2023. And if you take it all the way across, we are where we kind of were. There's only a period of time where it's been less than this, and it goes back to the early 90s,
Mhm.
90 through 95. It seems like if we kind of looked at this, we wanted to put it into a perspective over about the last 30 years, our bottom has been around 4.1 million units.
Mhm.
And if we're starting to trend up, that's a positive sign.
That's a really good thing.
So Gary Keller had said, I think at Family Reunion, even probably prior, technically, our industry has been in a recession.
Mhm.
Simply because of the number of units that we're selling. And the cool thing, not the cool thing about being in a recession, what typically, if our economy goes into a recession, what typically brings us out? Housing.
Yeah.
So what's gonna happen is they're gonna make darn certain that our industry is healthy and we're kind of jumping around the bottom of a trend line. I would see, to be honest, nothing but a little bit of an upside opportunity here. And I think that's why projections are where they are.
Yeah, absolutely. All right, you wanna keep going? Anyone have
Yeah.
questions about that or comments before we move on?
Well, actually, I do want to talk about something else.
Okay.
When people are concerned about the economics of real estate, you could use this slide as just simply a one-page talking point that can basically put the entire industry in perspective. And if you think about it, I just explained it.
Yeah, it's a great visual. Again, it takes the emotion out of it. I feel like in 2020, 2021, 2022, it was after that period, it was like a waiting period for everybody when interest rates started to go up. And they're like, oh, I'll just wait till they go back down. And I think they're being
they did.
edged. They did a little bit, yeah, for a month.
We came out of the sevens and went into the sixes.
Yeah.
But I think people who said, I'm gonna wait till they come back down, were hoping that they were gonna go back down into the threes.
Right, exactly.
Even fours. We probably won't see that.
And it's going back to educating our clients, and this is a great slide to do that.
Yep.
I love it.
Yep.
Okay. All right, let's, anybody questions, comments? Anyone have anything on this they want to say?
So
I just, sorry, I have a question. Like, what will it take? It will take like a very bad world crisis to go to the threes. I mean, because when people are like, it's coming, like it will take a war, it will take, I mean, realistically, what will it take to go to those levels? Because I think from what I see on the graphic, it's what the sixes are like the regular or the normal that it should be right now.
We're probably not going to see those levels again.
So typically, what you'll find typically is that when housing isn't healthy and at a level that they want to see that's sustainable, right? So we're not seeing like rapid appreciation and rapid growth and all this stuff. If the government doesn't see that, they're gonna intervene and do things that kind of stimulate and make housing healthy. And get some units going again. Look how long it took us to come out of the great, recession, the great economic crisis that hit in 08. How long did it take us to get to 5 million units? I mean, that was 2013, that was 5 years. To get over 5 million units.
Yeah. And Carla, now there's just so much equity that just didn't exist back in the 90s.
That's why we're not seeing a huge increase in the amount of properties. I'm not saying there's not default properties, but people can typically cure their own default if they really will just sold the house and got the equity. Now, that may not be the case if they bought in the last couple of years. That could be a different scenario, a different story. We're not gonna see this dramatic jump in the amount of foreclosures that hit the market like we did in 2009, 10, 11, 12.
Oops, sorry. PJ, you had something?
I was just going to say one of the other things that we haven't factored in is the fact that this year forbearance is up. And so that's going to push some people into sales that maybe don't want to, but have to. And all those 2-1 buy downs that the lenders were doing, those are probably not the main driving force. I think Chip hit the nail on the head. Yet take those into consideration too. Who went into forbearance and is now in trouble, and who bought into that lower interest rate and now it's 2% higher and they can't afford the house anymore. So those are things that we're looking at as well, just to take into consideration.
Yeah, that's something that, I keep watching too, PJ, like how many notice of defaults are filed, and we're just not seeing, it's funny, I'm getting bombarded with stuff from companies that are trying to get me to buy their program to list foreclosure homes. Well, okay, I already know how to do that. I did a ton of it, 10 years ago, whatever.
I think we actually have a slide on here that shows where the foreclosures are, and it's really less than 2% of all sales right now.
Yes, well, even the
what do you
amount that's
focus on?
going into true default
Right.
is actually less than 1%.
Right.
Well,
Yeah.
and the foreclosure percentage is low, yet the amount of vacant homes or foreclosed homes that are just sitting out there that aren't on the market, I think we were up to like 40,000 in North Carolina alone. I'll double check that number.
Well, it's still a lot less than, millions.
Right.
That's just one state too. So, but yeah.
So I love what PJ and I are talking about here, guys, because all of this is about perspective. We tend to live in the moment and we think things are bad or whatever, but then when we do a larger view out and we look at things compared to other periods of time, it sort of gives you like this whole different view and look about, not just about even just your own mindset around it, which is extremely important, but how can you educate people by using certain graphs? I'm not sitting here to take out this 70-page slideshow and start talking to people, but there are a couple of things in here that you'll probably want to get to know really well that could go a long way at educating people that you're having conversations. Because once you shift their perspective, if somebody sits there and goes, look, I'm not gonna buy a house until I can buy foreclosure and get a good deal. Okay, well, so does everybody else want that, right?
Right.
So we don't have that many foreclosure homes hitting the market. Everybody wants that deal. How competitive are they gonna be and are you really gonna get a deal? To me, though, you also need to like ask the question, what is a great deal for you? Because that may exist outside of the world that they're thinking. I think the only place there is. All right, you wanna go to
Yep,
this one next?
let's jump in.
All right, home sales monthly, let's look at this one. So what we're seeing here, this starts giving us the idea of like, gives us every single month in 2024, how many homes we sold in that month and what that did from calculating it on an annualized basis, right? So if we look at it, we went to last August and September, it's almost like, oh my God, in 2024, we're not even gonna hit 4 million units. And then in the fourth quarter, we saw a little bit of an uptick, right? We started to sell enough homes that by the time we got to October, if we keep at that pace or greater, it would be slightly over 4 million. November would have been 4.1 million annually, and in December's pace would have been 4.29 million annually. Now, let's look at how that's translated already this year. And again, these slides are only done through January, February, but already, I think this is why we're seeing we're in January, we're definitely ahead of January last year and still strong. We may not have, gone ahead of February of last year, but it's still pretty strong. I think this is why they're forecasting kind of that 4.3 million number.
Yep. All right, let's keep going.
Okay, let's look at this one. This one.
Yeah, let's stop here.
There's a lot inside of this, and because I think, again, we got a perspective out there that buyers don't wanna buy right now because they wanna wait until prices fall. Because everything is super inflated, it's overpriced, the
Yeah.
market's overheated. Okay, so let's look at this. If we look at the solid line, it's called a long-term trend line. And it's based on what they say, what the government likes to see is an ideal 4% appreciation per year. That is kind of like their sweet spot number. We're getting growth. It's not out of control growth, it's very sustainable growth. And if we keep that trend line going, guys, are we really that overheated? We are a little bit, but not to the level that a lot of people think. We're only about 10% above the trend line, and even forecast this year to probably end up around 10% above that 4% long-term trend. But that long-term trend goes back to 1990. So I mean, we've got 35 years of data in this thing. And where were we in 2006 and 2005 and 2007? We were way above that trend line. That's a bubble. That's a bubble that got created because of very creative financing and like literally getting money in the hands of people to go buy homes who probably shouldn't have bought a home.
Well, and I think this particular slide, if I was going on a listing and somebody was on the fence about selling, oh, maybe I should wait, maybe I could get more money, 6 months from now, or maybe I would pull this one out because now is the best time for a seller to sell their house.
Sure.
I mean, this is, the only thing that is the present, right? And we've seen this trend now for a long time. And we just don't know that that's gonna be, we know it's not sustainable, right? So if I'm a seller and I'm an agent, I'm gonna pull this out and have a conversation. Like, if you want the highest price that I can get you today, today's the best time to sell.
It appears that this would be your kind of sweet spot.
Yeah, this is the sweet spot.
Because we had, if you look back at this, guys, we had 12 years that we didn't hit that long-term trend.
Right.
We weren't in an appreciating market for 12. We were, but we weren't. For almost 12
We
years.
weren't at the 4, yeah.
Yeah, we weren't at that 4% line.
In Charlotte, the local market is even higher than that.
Yeah,
So, now is the best time to sell.
yep. Questions on this one? All right, we'll keep going.
Anyone, comments, anything? What are you seeing?
I know there's a lot, and we don't wanna like inundate you with a bunch. I think there's probably about 1 or 2 more we're gonna talk about. And then we're just gonna have some conversation, like ask you guys questions, feedback, all of that.
All right, let's go to the next one.
So the next one that we wanna see is, yeah, home prices, love this one too. All right, so this is gonna be the median home price in the United States in the thousands, so in other words, we're looking at December of last year, 404,000 was the median home price for that month. Okay, now let's look at 2025, January and February. Higher than it was January and February of the year prior, but not like extremely a huge difference in it, right? We're probably right at about 4% if we do the math on that. What I love about this one is that it kind of shows a little bit of, it kind of gives people, consumers, a little bit of that seasonality trend that tends to show up as buying demand gets a little stronger in March, April, May, June into like July, and then things start to cool off a little bit and level out. And then we, as always, we start off January, February, a little bit quieter, those are our quiet months, but then we start moving into the spring season. We start to see things up. So if we started January and February this year at a higher point than we did last year, I kind of wish we had already had March and April's kind of numbers in here, because I'm pretty sure we would see numbers that are higher than the prior year as well.
Yeah. Questions around that?
Okay,
Okay.
let's scroll down.
You want to do one more or you want to open
Yeah,
up for questions?
we'll do one more.
Okay.
That'll give us about 5 minutes for questions. I don't want to talk about affordability. Sorry, we'll talk about that another time.
It's a good one though.
Inventory. I want to talk about inventory. All right, inventory. This is annual months of supply of inventory. Balanced market is 6 months, which is the dotted line you see. And again, I love this one. This takes us all the way back to 1983, all the way through the end of last year. So we got our markets where we are definitely in a buyer's market. That would be anything above the trend line. Anything below the trend line or the balanced market line is a seller's market. How long have we been in a seller's market? 12 years.
A long time.
12 years. So for those of you, when we started the question, or started the Zoom earlier, I asked how long have you been in the business? For a lot of you, you have only ever worked in a seller's market.
Mhm.
And isn't it funny? We've had different extremes of the seller's market.
Mhm.
We've had some that have felt a little bit more like a balanced market. We have some that just, well, okay, look at 21, 22, when things were really moving very fast and inventory was flying off shelves, right? That's what it felt like. This again is a great visual. And what have we started? What are we seeing since 21 through 24? We're seeing a little bit of that annual increase year over year, but we still have a long way to go before we get to a balanced market. And then if we cross over, then we'll be in a buyer's market, which, by the way, could be the first time since about 2011.
Yep. All right.
All right, so I'm gonna pause it there. We don't want to talk about anything else slide-wise today. Other than I will say, we gave you national numbers, and to put this into perspective a little bit more, these numbers are based on resale homes. New home construction is not included in these numbers. Okay, now that's number one. Number two, I would challenge you guys to go in and look for some of the same kind of like reports or diagrams for the local market. Whether you do it for like Charlotte or Mecklenburg County or surrounding the Charlotte area, you can do that. If you've got an area of focus that your business is in, such as a farm area, or you primarily work South Charlotte, Valentine, whatever, zip codes, go and pull these same kind of stats out of the MLS and just and have it as a comparison. You'll see how the local market does against the national market. And a lot of times what you are going to see, we are going to be healthier
We're gonna be healthier.
than we are going to see.
But
with
still
some of
very
these.
important to pay attention to the national.
We absolutely have to see both.
Yeah.
Because the national numbers will catch up to us, trust me. We've been doing this long enough, we already know that.
Okay, what questions, what comments, what ahas do you have today? On this sunny Monday
Beautiful.
morning, beautiful Monday morning.
I know we covered a lot of stuff. Just throw one thing out there, even if you have a question or want to learn something more about.
I have a question. You mentioned, and I love the concept, we have a record of equity in the homes. And right now it's a great time to sell your home, like you were mentioning, Robin, I mean, you're gonna get the highest. And we see the inventory is not that many, so I mean, it makes sense. But I encounter when I'm talking with people like, okay, it's great, I'm gonna get a great equity, but then they go, but I'm not gonna get the same deal when I buy a home. So, and that's always where they stumble, like, yes, great on this side, but I get like cross on this side, so they wait to do
Well,
some
that goes
movement.
back to the motivation of why they would want to buy, right? So we have to really like hone in on that. What's the event in their life that's causing them to want to buy, or is it just they want to?
Yeah,
Um,
and right now, Carla, I mean, waiting isn't paying off. I mean, we have so many examples of where people that waited even 2 years ago and they've seen that same house now $200,000-300,000 more than what they could have bought it for 2 or 3 years ago. So waiting has not paid off for buyers in the last
right,
several
because
years.
we saw the graph that there's still appreciation, right?
Yeah, the
So-
appreciation's still happening.
If somebody 2 or 3 years ago paused because of rates and didn't want to buy and they were gonna wait for better rates, what happened to the price of homes in the last 2 to 3 years? It went up. So now they lost equity. They lost the opportunity for the market to give them equity.
Mhm.
They were also gonna get some equity through amortization. That's not gonna be as strong and powerful for a shorter period of time, but the market's still giving them money.
Absolutely, yeah. Okay, what else? One more.
All right, then I'll close it out with this. Tomorrow, we're gonna talk about something, a team meeting called LORE, Language of Real Estate. We're gonna go over some stuff. Not really like this, but kind of like just some different numbers, and again, different ways you can use this stuff, so we hope to see everybody tomorrow at team meeting.
Yes, and I got a few closing, just quotes for you. You don't have to be great to start, but you have to start to be great. That's Zig Ziglar. Love it, love it, love it. Real estate is not just about the property, it's about people. So go serve someone today. All right, guys, have an awesome Monday and awesome week, and we'll see you in the office.
See you guys.
Bye, guys.
Thank you.
Thank you.